Well, let's focus on the star of last week, which is the metals pack. A lot of that we could see some kind of duties coming in to protect the domestic ferrous industry. And also on the global front, you had Hindalco as well as Vedanta that did pretty well. To understand what's the way ahead, we're joined by Tushar Chaudhari, the lead research analyst at Prabhudas Lilladher. Hi, Tushar. Good morning. Good to have you on the show. Tushar, let's get a couple of factors out of the way first. There was a price increase that was trying to be pushed through in January. There was a rollback as well. But net, what is the price increase we have seen on steel prices between January as well as February? And also, what kind of an EBITDA per ton improvement are you penciling in for the ferrous pack in quarter 4 so far?
See, in the domestic balance, steel prices had declined to almost to the level of 46,200, 46,300. Post that in January, basically post festivities, demand started inching up, and companies have taken price hike to the tune of 1,000 to 2,000 rupees per ton across their portfolios. Some of which it has probably gone back, but most of the portion has been absorbed. And in the secondary market also, we have seen prices going up to 48,500, 48,700, and now they are again pressing back to 48,300. So there is some improvement of let's say 1,000 odd rupees on if I compare on a quarter-on-quarter basis. In terms of EBITDA per ton, probably in the next quarter, basically this quarter, fourth quarter, we will see a little bit improvement on EBITDA because your coking coal prices are still down, and consumption cost will probably come down by another $10-12, while your NSR realization basically will inch up by 500 to 1,000 rupees depending upon what will happen in March. But in terms of demand, I think the demand has started inching up post festivities, and now with the higher government spending, we expect that demand should inch up further till monsoon.
Okay, so net EBITDA per ton improves by how much?
So I think it will be it will vary from company to company. Like in the case of SAIL, probably it will be higher because of pricing impact. And other integrated players like JSW, Tata will be in the range of 700 to 1,100 rupees per ton.
All right, so around 1,000 to around 1,500 rupees per ton improvement in EBITDA per ton is something we could work with for quarter 4 versus quarter 3?
As of now, it looks like if prices go down further, then obviously your NSR will be flattish.
All right, let's focus then on this, the talk about some duties coming into place. But before we get to that, currently, how are domestic prices in comparison to global prices? Because as you're saying, there has been a push on ground for a price increase. The global prices continue to remain weak because China is continuing to export and global demand is still a little bit weakish. So what's the difference currently between domestic prices as well as landed cost of imported steel?
Right, China continues to remain weak. It had gone up to almost $500, but now again traced back to $470, $475 per ton. If you look at on import parity basis, I think we are largely still at discount by 500 rupees. We have got 7.5% import duty, and over the last 1 year, probably this discount has narrowed. We were at premium last year. Now we are still at discount by almost 600-700 rupees per ton. So imports, I don't think is happening over the last 2-3 months. Import intensity has come off. But yeah, with the current tariff scenario going on, probably you can expect some more imports from China.
Okay, so India pricing, Tushar, is at a discount of 500 to 700 rupees in comparison to imported steel, correct?
Yeah.
So if we get the 20-25% duty in place, what is the headway that the domestic companies have to increase prices? How much do you see it go up by?
See, first of all, I don't think it will be 20 to 25%.
Okay.
Industry is asking for 25%, but
okay.
I don't think government will directly aid so much. Probably it will be much lower. But today is a time where every country is doing protectionist measure. Like day before yesterday, Vietnam has imposed temporary taxes on steel imports from China because their China imports had increased to almost 12-13 million ton. Even today, EU talked about lowering the quotas. So I think this is an opportune time for Indian government also to act and probably give some safeguard duty to protect the prices in domestic market.
Okay. All right. Okay, Tushar, thanks a lot for that. We have the top buys as well that came up for our viewers on the screen in the order of your preference. So you're sounding more or less optimistic on the metals pack. But